Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola and Malaysian palm oil. Paris Rapeseed. Happy Valentine's Day. The market's rise until January this year started in August 2024 from the support of the slowly rising long moving average, currently at 495 even, and the 50% absolute Fibonacci line of 445.5. This move higher did not happen all at once, but during most of August and into the first half of September. In the process, prices formed a not very pretty looking reverse head and shoulders pattern with a fairly flat neckline, currently at 478.5, and is highlighted in bright green on my daily chart, as this is now coming back into the frame after the recent changeover gap lower. Anyway, 21 weeks ago, prices broke higher over this neckline at the last of the moving averages, reaching both the primary and secondary topside targets for the reverse head and shoulders pattern soon after. In the process, the market created a mid-August based expanding wedge pattern that soon morphed into a bull channel and saw prices run up within this pattern until mid-November, where they peaked at the March 2023 high at 540.75. The turn lower was quite dramatic, with a gapping move lower and a drop finally halted by the rising mauve medium moving average, currently at 512.25. The subsequent recovery higher stopped short of the previous November 2024 high, peaking in early December 2024. The following pullback lower was also not to the extent of the earlier late November fall, thus giving some ammunition for a fresh attempt higher. Now, in reality, whilst we made new higher prices, the closes did not match the move, closing once again below the March 2023 high of 540.75. All this action brought to my mind again my comments from 9 weeks ago when I said, and I quote, "All this raises the question as to whether the action since mid-September, especially mid-November, is a double top in formation or a bullish halfway hesitation," end of quote. Well, after the peak in January turned out to be neither of these scenarios, but instead a triple top, with the January high itself being a horn top. 2 weeks ago, prices were once again held up by the mauve medium moving average, but with changeover we had a big gap lower, originally 490 even to 509.75. It's not the largest gap I have ever seen on this commodity, but useful enough such that prices opened after it below the gold long moving average, currently at 495. And even below two important supports, the significant dark blue February 24 to date uptrend, and that's currently at 488.75, and the purple neckline extension, currently 484, of the April to August 2024 head and shoulders top, plus just above the previously mentioned bright green neckline extension. Since then, prices have recovered, if slowly, and tried to fill in the large gap overhead, but the move higher has been constrained by some previous congestion at 491.75, and now quite significantly this week by the long moving average that's overhead, currently at 495. Further up we have further congestion at the July 2021 low at 497.5, then at 501, 504.75 and 506 even, before the gap can finally be filled. However, whilst there might be pressure to fill the changeover gap topside, there's also bearish pressure emerging and likely engaging with the market, notably what we have finally constructed between October 24 to February 25, and that is a triple top. This pattern, though not a very pretty one, does give us some potential targets below. The primary target down, target X down at 480 even, and a secondary, harder to reach, target X1 down at 458 even. Now, the move lower last week down to 481.75 had just about reached the primary target X down at 480 even, enough for me to consider retiring it. But for now, I will still keep it open, as the competing forces of gap filling and the triple top overhead carry on competing with each other. Winnipeg Canola. Happy Valentine's Day. Between late July to late October, the market created a reverse head and shoulders pattern. 13 weeks ago I said about this pattern, and I quote, "Waiting in the wings should the neckline be properly broken, at which time I will likely lay out fresh targets for this new, currently potential reverse head and shoulders pattern," end of quote. Well, we tested the neckline, which is currently at 697.80, throughout late October and early to mid-November, until the patience of those who saw this pattern, me included, and were waiting for a break higher, finally dried up, and the market turned and broke down through the key gold highlighted flatlining or long moving average, currently at 630.90, triggering a big move lower all the way down to lows of late November 2024, and also seen in February and August 2024 between 571.90 to 575 even, with the ultimate outcome of a monthly key reversal down for November. However, the market did not follow on lower following this pattern, this November pattern. No doubt buoyed by the congestion we saw in February, August and September last year, and back in November and December 2020 at 575 even and 571.80, and the December 2020 low at 567 even. Since then, prices started a 3 steps up and 2 steps down action, gradually moving higher for a while, halted by the gold long moving average, but then breaking higher in mid-January, and last week utilizing the gold long moving average amongst others as supports for a still further move higher. This action left us with 3 significant features on this market, one of which I previously mentioned and one that came to a cusp last week. So, 8 weeks ago, I said the following, and I quote, "The newly drawn bright red middle tine, currently at 650.5 of the bullish shift pitchfork, for the same move as the dark blue bullish Andrews pitchfork." End of quote. This bullish shift pitchfork is for the mid-September to late November 2024 move. Plus, I've now chosen to highlight it in dark blue instead of bright red. Otherwise, it is still all relevant, as the market had been closely associated with the middle tine. The second feature to note is that since mid-December last year, the market has started to form what looks like an ascending wedge pattern, currently 641.80 to 675.80. I've highlighted this pattern in bright green on my daily chart, and it is still valid today. Finally, and this is the pattern that came to a cusp last week, was last week's weekly key reversal up. We have satisfactorily followed on higher from this pattern from last week, though obviously halted by the bright green upper trend line of the ascending wedge pattern. Nevertheless, it is a pattern that is still worthy of noting. First to Malaysia, crude palm oil. I said here 18 weeks ago, and I quote, "Of all the oil seeds and veg oils, palm oil has been the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market, seem to have captured it somewhat, at least since April." End of quote. Okay, so the first of these patterns was the broken upper tine, currently at 36.07 of the old August to November 2022 bearish shift pitchfork. I know that is way lower, well below the current market, but the upper tine had acted in the past as a declining support, so I'd suggest keeping a wary eye on it, and the thought and image of it just in the back of my mind, just in case. The second pattern is the bright red neckline, currently at 44.08 of the September to November 2023 reverse head and shoulders pattern, which I've highlighted repeatedly, and which even last week was affecting the market, acting as a support. Additionally, and this one I also added last time and many times previously, is the dark blue neckline, currently at 444 even of the September 2015 to November 2017 head and shoulders top. I've not been sure about this one in the past, but it is an old one, a super old one, that had been way below the current market but has recently become significant. The third pattern here is the very slowly rising gold long moving average, currently 42.72, that stopped the market fall dead in mid-January and has truly acted as a base for the rise in prices we have seen since. Now, there are other features to watch out for, and to start with, I'd look to how the market has waded up through a wide congestion zone between 44.08 to 45.59, possibly as high right now as the mauve medium moving average. You could extend that up to there, which is currently at 46.24. We are now above this congestion zone, so we would now start to act as support. Within it, we have the old March 2008 previous all-time high of 44.84, as well as the April 2024 high at 45.27, and the June 2022 low at 45.59. I still suspect the slowly rising mauve medium moving average may well be the one to watch, especially if it starts to become a base of support for some future attempts higher. Finally, I've outlined a mid-August 2024 to mid-January 2025 bullish Andrews pitchfork. This is an unhighlighted pattern, as it is very much a nascent pattern, only being 4 weeks old. But I think it is worth considering. However, I would finesse or morph it in a heartbeat to a shallower bullish shift pitch, or even retire it completely if I thought appropriate. Right now we're in between the overhead middle time, currently at 51.21, and the lower time below, currently at 44.11. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.